What's up, guys? I think I'll just give it a couple of seconds for somebody to join us in the building. Otherwise, nice to have you guys here. We here, we here, we here, we here, we here. Let me just see who's in the building with us. Because obviously, guys, we have the opportunity to have such a beautiful interaction in today's live session. So instead of us having or posting a YouTube video, what we want to do is instead have a live session with you guys so that we can also be able to interact as we are sharing the value. Nonetheless, let's see who's in the building with us. Funny Lucky Mamba saying, let's go. What's up, Mamba in the building? I see Skuru saying, we're in the building, guys. Let's just see who's in the building with us. Want to make sure that you guys are here, that when we do get started, guys, everyone that's supposed to be in the building is in the building. Ntamayile, nice to see you. So beautiful to see you. You're in the building. I see Nyakeho. Hopefully, I'm not butchering the name, but you're here. David is in the building. Mtutuzi Tumelo saying we're in the building. I see Tipo saying we're in the building as well. And Tlantla saying, aware.
Sorry to disturb. That background is not working. Come this side.
Okay, cool.
Yeah,
No
that's
stress, no stress, no
Yeah.
stress. And let me just do this as well. I even forgot about that. Okay, guys, let me just move my setup just so that I'm.
Yeah, this one you can leave. We're going that side.
That side.
Where?
Outside.
There at reception.
To the outside.
No, reception. There's no one there. You can hold it. Yeah.
What up, Snake Gang? What up, Snake Gang? You live at Nivini?
Yeah, you can sit down there.
Okay.
Yeah.
Yeah.
Put the laptop on the on the desk. Oh, maybe. It's fine now.
I think it's okay. It's up to you guys. You guys
Yeah,
move me.
hold on.
Whatever's working for you guys will work for me. Okay, guys. So I got moved from where I was chilling. Nonetheless, we're still here. We're going to have our session. So, guys, as you guys can see, today's topic is basically understanding currency pairs. So, I myself have some stuff that I would like to get into with you guys, but also, I would also, because we do have a live session and we have the opportunity to interact as we're going, I think I'll also just browse. I'll keep my eyes on there to see if anyone asks any questions as we go along. So to kick things off, guys, let's talk about currency pairs because we need to understand what we're doing. I see, okay, cool, in the building. So we need to understand, guys, what we're trading. And basically, so I primarily trade these currency pairs. So we're going to be speaking about them to understand what they are. We need to know exactly what we're doing. So basically, you guys know that we're trading Forex, and in Forex, we have currency pairs. And what a currency pair is, it's just basically a comparison between two currencies. So how much stronger is one currency relative to another? Like for example, we have Euro USD, and maybe the price on Euro USD, if you go look at the chart, I don't know what's the price, I don't trade Euro USD, but if you go and look at the chart, maybe it's 1.20 something, 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 1.24 numbers. All that means is that for 1 euro, if you have 1 euro and you exchange that euro for the quote pair, which is the dollar, Euro USD, you would get $1.2. Now, the same thing would apply for every single pair. Like, let's look at USD ZAR, for example. Right now, the price of USD ZAR is like 14.51, whatever, which means that if you take, because USD ZAR, if you have one of the base currency and you exchange it for the quote, you will get 14 Rand 51 cents because that's us exchanging the base for the quote. So when we're speaking about currency pairs, guys, we're mainly focusing on the base pair. The base is what we're talking about when we're speaking about these currency pairs. So when you are buying or when you are selling, like when you, for example, you trade USD JPY and you're getting ready for NFP today, you're USD JPY. When you look at USD JPY and you're opening a position on USD JPY, when you open a buy position, what you are doing is buying the base pair. When you open a sell position, what you are doing is selling the base pair. So, for example, maybe if I am your broker and you're opening a buy on USD JPY, what you are doing is you are buying the base pair from me as your broker. Me as your broker, I am selling that to you. Now, obviously, the inverse, when you are selling a pair like USD JPY, what you are doing is selling the base pair. So you are selling dollars, and obviously, you are buying the quote pair. So you are selling dollars to buy JPY or the yen. So that's basically just in a nutshell how we kind of explain and understand our base pairs and our quote pairs. Now, let's talk about the pairs themselves. Now, we know that generally there are, I'd call it what can I call it? A criteria or whatever the case is. So we know that there are our pairs are kind of split. We have major pairs, we have minor pairs, and we have, I guess you can call, or let's not use the word minor. Let's say we have major pairs, we have crosses, and we have exotic pairs. That's how I kind of wanna, just for the simplification of today's talk. That's how I kind of wanna break it down for you guys. So guys, when we're speaking about our major pairs, now if we think about what are the major economies in the world, obviously the dollar stands out as the biggest. Compared to every other economy in the world, the dollar is like the powerhouse, the strong one, the first one. So any pair, rule of thumb, any pair that has the dollar as either a base or a quote, we can assume is maybe a major pair. And the reason why I'm saying maybe a major pair, because we do have things like USD ZAR, where the USD is the base pair, but that obviously is not a major currency. It's not a major pair. And we're going to get into why. We're going to get into why. So when you're thinking about it, think about all of the first world countries, guys. Every first world country obviously has a good, stable economy. And with a good, stable economy, obviously comes good, stable businesses that are making transactions with each other. And that's why you find that these major pairs, like, for example, Euro USD, GBP USD, whatever else, they have a fairly stable they're fairly stable pairs because they are so liquid, because there's so many transactions being made between those pairs. So we can call those, I guess, major pairs. Now we'll move on from, what our major pairs are to what our crosses are. Now remember, we're calling our minor pairs our crosses. Now what a cross would be just a cross between two major pairs. Like, for example, maybe if we have let's just say the euro against the pound, those are both first world countries. But keep in mind, the dollar is not involved within that cross. So we can call those minor pairs, or we can call those crosses. So anything else, let's think about our major pairs with the dollar. So we have, maybe let's just start from the top. We have AUD USD, we have Euro USD, we have GBP USD, we have NZD USD, we have USD CHF, we have USD CAD, we have USD JPY. So obviously those 7 pairs are our major pairs. Now, if we look at all of those pairs, each of those pairs has one thing in common, the dollar. Now, if we remove the dollar from that equation and we just end up with AUD, we end up with Euro, we end up with the pound, we end up with the New Zealand dollar, the CAD, the Swiss franc, and the yen. Now, those 7 pairs, no matter how we mix and match those pairs, whether it's AUD JPY, or I see someone saying NFP countdown, someone's getting ready for NFP. So whether that cross is, for example, AUD JPY or maybe Euro GBP, all of those major pairs, I guess we can conclude those are our crosses, or those are our minor pairs. So now that we've done our major pairs, our minor pairs, we come on to, I guess, the least volatile of the bunch, and obviously you'll find widespreads and all of those funny things. We come to our exotic pairs. Now, our exotic pairs are normally maybe second world or third world countries, or if there's any other thing outside of third world, like fourth or fifth or whatever. But nonetheless, we know that they are obviously developing economies. Like, for example, South Africa. We are a developing economy. Now, our cross, obviously, or our exotic pair will be the US dollar against the South African the South African rand, which is the ZAR. So something like a major thing like the dollar coupled with a third world country, we can call that an exotic pair. And the reason why they're called exotics is because if you think about the word exotic, exotic means that it's something out of the ordinary, something that's not really traded all that often. So we can conclude that these exotic pairs will have things like wide spreads and low volatility and all of those kind of things just because they are not traded as often. Now, the difference between, for example, let's take USD based pairs. Let's take USD CAD and USD ZAR. The difference between those pairs is the amount of volume that is traded on those pairs. USD CAD has a lot more traders looking at that pair than USD ZAR has. And for that reason, because of the lower volatility, you'll find that maybe USD has a lot wider spread. So when you open that buy or that sell, you just see a big negative and you're like, oh my God, what did I do executing a trade on this pair? How did I end up with 0.01 already minus $12 just after I press buy? That's just because of the size of the spread. And the reason why the spread is so high is because there's not a lot of volume being traded. Now, if you go, for example, to Euro USD, there's so much volume. So you'll find that spreads are very tight. Why? Because liquidity providers are competing for the best sell and the best buy prices because there's so many people that are willing to buy and sell those pairs. So liquidity providers are obviously competing for the best offers. Now, inverse on USD ZAR has a lot less participants. So there's a lot less competition when it comes to competing for the best buy or the best sell price. So down to the reason why we were speaking about these different pairs and stuff is that especially as a new trader, you want to think about what are the appropriate pairs for you to be trading. Now, for me as a trader that's been trading for the longest of time, I am familiar with the pairs that I'm supposed to be trading. Funny like it tried to confuse me, but I fought the enemy. So I'm familiar with the pairs that I'm trading as it is, guys, and I have a set list of pairs that I trade with my own reasons. And as a new trader, what you want to be doing is you want to be narrowing down your focus as soon as possible and with as much reason as possible. You don't just want to decide, okay, I'm going to trade AUD USD because Tremaine said trade AUD USD and it's a nice pair. You don't know that it's a nice pair. Yes, I know that it's a nice pair because I've tested it and I know why, but you don't know that it's a nice pair. So what you want to do is you first of all want to cast your net out wide. Be broad, be generic, trade everything. Trade stocks, trade currencies, trade indices, trade synthetic indices, cast your net out wide. Because when you start off by generalizing, you get a feel for a lot of different markets. You get to see where what most likely rings with you inside. What are you most comfortable with? And that's kind of what you want to do. You want to work off, you don't want to throw yourself in an area that's very difficult. Like you see a lot of people trading Nasdaq and you just want to be there because the money is there. You don't know that, for example, maybe you are a lot more comfortable and a lot more proficient, and the way that you look at double tops, double bottoms works a lot better on AUD USD, but you don't know that because you've never tried AUD USD. So in the beginning, guys, as a trader, you want to kind of generalize and you slowly begin to start to specify. Now, the reason why a lot of people say that you should start off by specifying and start off with one or two pairs, and the reason why I'm kind of slightly against that approach is because I feel like trading is very subjective and you need to, as an individual, be comfortable with what you're doing. Just be competent in what you're doing. And if you've tried and tested something, you are more competent in that thing that you've got market experience from than, for example, me just telling you that Nasdaq it's happening. NFP it's happening on Nasdaq and that's where you should go. You'll have a lot more, you won't be as comfortable as trading that pair that you're familiar with, that pair that's comfortable. And also take into account things like your account size. If you're trading with a smaller account size, do you want to be trading things like Nasdaq and US30? Obviously not. Do you want to be trading those exotic pairs that we spoke about? Obviously not, because those pairs are not conducive for your account size. Yes, maybe you might be a good trader and you might be sniper entering and all of those things, but your margin of error is very small on those pairs. You have a $50 account, you lose one trade on NASDAQ, you have $25 left. That means you can only take one more trade before it's the end of it all for you. I see I see someone saying now I know why Steve took you into the team. Guys, I feel like this was just a very much law of attraction thing. Like we just really pretty much attracted each other. He knew what he needed to do and for his goals to be accomplished. His mind was in the right space and he attracted the appropriate people. I also knew what I want to do, what my goals are, and I guess I attracted this position as well. So yeah. Shout out. We see you, bro. I appreciate my main man, Steez, in the building. I'm happy to have him here. Otherwise, guys, back to our understanding currency pairs. The reason why I kind of chose this topic is because I want us to be very competent traders. I want us to know exactly what we're doing because I know myself, when I started trading things, Euro USD, all of these currency pairs, and I really honestly had no idea what they are. And honestly, we're dealing with money. And if you are prepared to put risk down, you should be understanding the environment and where you are putting your risk. It makes no sense to go in with some risk, to add risk into an asset, a financial asset that you have no idea. I guess just what your environment like. What's the environment that you're making these interactions. I see someone's asking, please, brother, help us join 3.0. I promise you guys that the link to the 3.0, obviously after this live, we will save the live and this live will be posted as a video for people that are not able to join this live. And at the bottom in the description or in any one of our videos on the Forex Chasers channel, you will find the link to the 3.0. So hopefully I helped you. Hopefully I sorted your problem out. Nonetheless, we're keeping this train moving, guys. We're keeping this train moving. So part of, guys, understanding our currency pairs is just kind of maybe finding a nice spot for us, because remember, we want to be as efficient as possible. We want to find the path of least resistance. And you first of all need to understand where you are, what position you are. You are a retail trader, where you are, and then you need to find out, okay, cool, now that I've isolated my pairs and all of these things, what time frames am I comfortable trading, what this am I comfortable trading. So the whole point is to begin to specify. We start off by generalization, and then we obviously want to specify. Now, the first area where we need to be able to specify as a trader is obviously the currency pairs. And I feel like, guys, every time we have these conversations, or where we have these lives, when I'm hosting the live, I'm gonna go step by step. Maybe this live we'll talk about currency pairs. Maybe next live we'll start to talk about our processes of analysis. Maybe we'll talk about the time frames that we should be looking at. But what I want us to be doing, guys, is to be specifying, because that's where the money is at. When you generalize and you start to begin to laser focus, and I owe this to my mentor himself, Steez. He's the one, I guess, the individual that really pushed me to start to specialize and specify on what I'm doing. Yes, I was specializing and specifying in my own way by just isolating my high probability setups, but that dude has been such a big positive influence in me getting comfortable and surrounding myself around the pairs that I do trade. The pairs that I trade, I understand them so well. Like, I can quote every single structure for you, and that's just because of specializing and laser focusing on this one specific pair that we've been going through. I think, guys, now that we're kind of rounding up and drawing towards the end of our session, I would like to know, what do you guys not understand about your currency pairs? Because today's session, we are understanding these currency pairs. So whether it's maybe why a currency pair is quoted, why currency pairs aren't standalone, or whatever, guys, I'll just open it up to see what you guys don't understand about currency pairs, and we'll get into some of that. Let's see if there's anything. Okay. So far, there's nothing really for us here. Though I guess maybe another question that a beginner: which currency pairs do you like and why? So awesome question, awesome question. I like that you asked and why, because the and why is more important. Is the most important part. So basically, I trade a lot of. If you look at the list of pairs that I trade AUD pairs, CAD pairs, Swiss franc pairs, JPY pairs, and New Zealand dollar pairs. Okay, I do have $1 pair, which is AUD USD, but so I have no particular pair. Cool. But the reason why I trade those pairs is because, for example, AUD and JPY, those pairs are kind of very stable pairs, and especially for someone that's starting off, that's a beginner, especially JPY pairs. JPY pairs get into beautiful trades, guys. So whether you want to practice your continuations or you want to practice reversals, these very nice stable trends, I mean these stable trending markets like AUD, like CAD and like JPY, those markets very beautiful, I guess, beginners to start off with. And those are the pairs that I gave a lot of attention to. Correlation of pairs. What do you do when, okay, cool. We'll get into that. Nice correlation, because that's understanding pairs. That's understanding our environment. Thanks for that one, dude. Though I love to trade because most of my introduction was with those easy pairs. I like to just stick to the path of least resistance, dude. Like, for example, I found that pound pairs exaggerate a lot of the moves. Like if you look at GBP USD and Euro USD, you'll find out that maybe they positively correlated, they move in the same direction. Maybe Euro USD went up 10 pips. You'll find that same move on the upside was on GBP USD, and that move was 30 pips. So like it exaggerated the move. So for me, that was starting off with a small account. I didn't want to be wrong and lose a lot. So do you see how I went over to the easiest things, the things that don't move a hell of a lot, that don't have, like, I guess, a big average range. For the JPY pairs are more stable than the majors. I would say in terms of trending and reversal structures and continuation structures, I found that maybe these JPY crosses, maybe not USD JPY, for example, but when I cross like AUD JPY, CHF JPY, I'm gonna quote the pairs that I trade, the JPY pairs that I trade. I trade AUD JPY. That's been a pretty stable pair for me. Like I can catch those reversals, I can catch those continuations. I trade CHF JPY. CHF JPY, guys, with those reversals, and that's why I love it. NZT JPY, very stable. When NZT JPY gets into those trends, you can be that swing trader that just trail stops according to structure, and that's why I love those pairs. Nonetheless, I think that part of today's when you analyze Aussie CAD, no, Aussie CAD is beautiful, guys. Aussie CAD, it's literally the only pair that I love to look at on the 1 minute. The 1 minute chart on Aussie CAD, that keeps me interested the whole day. Aussie CAD is just such a beautiful pair, dude. Though, yeah, let me just check these questions again. There's a question about correlation, so I think we should get into that. Correlation of pairs. What do you do when they don't show the same direction? For example, maybe we can have AUD CAD that's correlated to AUD JPY. Maybe they're both, one AUD CAD is showing a buy, AUD JPY is showing a sell. When I have a situation like that, guys, each pair is individual. I like to think about my pairs like a bunch of ladies. So I have 8 ladies there, and these ladies, sometimes they're moody, sometimes, okay, let's just say they're always moody. Sometimes the moods are good, sometimes the mood swings are bad. And so each of these pairs, they honestly have their own individual characteristics. So if AUD CAD is showing me a buy, AUD JPY is showing me a sell, I trade these pairs individually. If I want to take that risk on both of these pairs, I just use correlation to maybe manage my risk. But in terms of execution, these pairs are 2 individual things and they have their own characteristics. So if I'm trading, for example, with a minimum risk to reward ratio of 1:3, which I do that religiously, it is a religious practice of mine. That is where my religion at. My religion is at Forex. My trading plan is my religion. So 1:3 risk to reward, something like that. If those pairs, maybe if AUD is the main mover of strength, you'd find out that maybe if they both moving to the upside, one trade will be stopped out, the other trade will go into profits. Now, in that case, you'd find that trading minimum risk to reward ratio of 1:3, you've lost 1%, but you've made 3%. Do the maths, you're still up 2%, even on those correlated pairs. So I still trade the structure individually, though I kind of follow my rules as to my risk management rules, because that's where the real gold is. Let's see. JPY pairs are more stable. I think, brother, you should make a video on how we can purchase the course. Okay, definitely. Say no more, dude. It's done. Definitely. Why do you trade the 1 minute? I trade the 1 minute because I understand higher time frame structure. I will never ever be on the smaller time frames. I will never ever make a decision of smaller time frame structure ever in my life. All of my decisions are based off higher time frame structure. Like, if any one of you guys are in the 3.0 already, or if any of you guys follow me on my personal YouTube channel, or even on the Forex Chasers YouTube channel on Monday, you guys see the analysis that I update. So I have a weekly routine where I do higher time frame analysis, and every decision that I make in the week is based off my higher time frame biases. Let's just make sure this is back on. I don't know why this went off. Yeah. Though any decision, guys, that I do make in between the week is based off my high time frame analysis. So even if you find me, like, for example, on AussieCAD on the 1 minute, where I'm entering on that 1 minute is maybe at H1 resistance or at H4 support, or whatever the case is, I'm always trading off higher time frame structure, even if I'm on the 1 minute. But the only reason why I'm on the 1 minute is because, number one, I'm comfortable with AussieCAD. Number two, I understand how AussieCAD moves when it's in a ranging market. I know how to approach that pair. When it's in an impulsive phase, I know how to approach that pair. I understand and I'm comfortable with the reversal structures that it produces, with the continuation structures that it produces. And so all of these things kind of compound, and they give me the confidence to be on a time frame as low as the 1 minute. Because remember, when we're talking about time frames, the higher the time frame, the more valid the structure we are looking at, and the lower the time frame we go, we sacrifice validity for detail. So on those lower time frames, we get more detail. Some people call that detail noise. I don't want to call it noise because I don't think it's noise. I just think it's more detail as to what price action is doing, because you find a lot better structures. Like, maybe you might be at resistance on a H1, that candlestick is nice and green, but if you go on a 1 minute, you'll find out that there's an impulse and correction. Where are you expecting that H4 candlestick to close? Are you expecting that H4 candlestick to reject off that resistance? No, because the 1 minute is showing you impulse and correction, so you're obviously expecting that continuation to the upside. So I still find a lot on those lower time frames. I think we're having some connection problems. Hopefully the network is back. Though what I was saying was I exit based off structure. So I look to exit at key important. If I'm buying, know at every resistance there's an opportunity. If I'm in a ranging market and there's no real structure for me to exit my position using, then I'll exit my position using percentages. So I'll partial out at 1%, I'll partial out at 2%, and I'll wait for my full TP at 3% or whatever the risk to reward ratio I'm going with. How can I start trading NZD JPY? Start by backtesting. First backtesting that you want to do is backtesting structure. So getting used to how does the H4 chart move? How often does H4 respect structure? How often horizontal support and resistance? You want to get used to the structures that you are trading on these pairs. Once you're used to the structures and the nature of how this market moves, you can then move on to backtesting your entries. How are you going to enter this market? When do you enter? Because now you're comfortable, you understand the structure, you know, okay, when I see a double top structure, it works more often than not on NZD JPY. So now that you understand the structures, you want to learn how to execute. So then you go on to backtesting execution. Maybe now that you're comfortable with execution, what's the next step? After you execute, you need to manage the trade. So now then you can start backtesting on NZD JPY. Where are the appropriate areas to exit? Do you want to exit using percentages, or do you want to exit using levels of structure? Those are the kind of things that you kind of want to backtest. So start off by trading any pair by backtesting. Let's see. Do you trade volatility 75? Yes, the only synthetic indices that I trade is VIX 75 and VIX 10. The way that I approach those pairs are the exact same ways that I approach currencies. So nothing's changed about my process at all. See, salute my G. What's the difference between trading sessions South African time? What are the different trading sessions? Oh, different trading sessions. So Asian session from 1 a.m. in the morning until 10 a.m. p.m. Sorry, it's 1 a.m. in the morning until 10 a.m. That's Asian session for us. I start looking at the markets at 9 a.m. So I catch that pre-market hour, that pre-market London hour as well, because sometimes the entries give themselves during that pre-market hour, like AUD CAD. I love taking those entries around 9, 10, 11. That's where we snipe for the day and we in the rest of the day. So yeah, London session starts at 10 a.m. So London session is from 10 a.m. until 6 p.m. And then New York session, a lot of people want to start New York session at 3:30, but I take into account the pre-equity market hour. So for me, New York session starts at 2:30. So 2:30 to 11 o'clock at night, that's New York session. So that's how I go about trading. And even my own personal trading times, I only look to execute between 9 a.m. and 7 p.m. I want to execute during London volatility and New York volatility. And I want to catch it in the morning. For London in the morning. For New York session in the morning. So that's why I don't take trades across like 7 p.m. because around 7 p.m. South African time, that's like lunch time. So all the important decisions are made in the morning, guys. So I want to catch that morning volatility. Let's see what's the different sessions. What's the name of the channel? T.main. Just search problem. I need a mentor. 3.0 is for you. I doubt myself way too much. You only doubt yourself because your processes are questionable. But once you start focusing on your processes, dude, your process of forecasting, your processes of analysis, your processes of execution, your processes of trade management, your processes of risk management, once you're comfortable with those processes, the confidence comes after that, dude. So focus on the processes first. The psychology comes after. We focus on the technical aspect of things. We master the whole technical processes. Once we're comfortable with that, then we start trading live and we get insight into how does this dude deal with when that trade is red. Then we start focusing on all the psychological aspects. So start off with the processes first. Where is Sandy? Shezi. I have no idea, dude. What a question. What a question. I see you. You hit us with a dab there. You hit us with a connected. Let's just give it a second. Okay, network is back. If you're looking at maybe the daily chart will give you information on what's happening on the weekly, also what's happening on the H4. So every single time frame is important. Every single time frame will give you information on what's happening lower and what's happening higher. Thanks for that, dude. Let's see what else is in the that was from John. Every time frame matters. What's the benefit of this? So if you guys remember, Forex Chasers had a nice free course. And that free course is obviously not free anymore, and that's the $7 course. So the $7 course is basically an introduction into the concepts that we use and all of those nice good stuff. So if you want to know what is in the 3.0, the $7 course gives an introduction into all of that. That's what the $7 course is about. And it does come with its own discussion group as well. It comes with its own Discord channel, obviously with its own discussion group as well. So there's a community that comes along with the $7 course. Do I have a course? No, I don't have a course, dude. I'm a mentor at the Forex Chasers. So Forex Chasers, that's where I spend my time. There is you on any convenient platform like WhatsApp, Instagram, dude. Instagram is probably the best place. Do you have a simple trading strategy on NZD JPY? So my whole process is in the 3.0. That's where everything that I do is in the 3.0. The structures that I look at, the way that I trade those structures, my points of interest, my process of analysis, everything is in a 3.0, guys. Everything is in a 3.0. Let's see what other further questions, guys. 3.0 changed my life. Enough said. I'm not even gonna on the H1. Definitely, I always trade off higher time frame structure. So I'll obviously see if H4 is heading towards resistance and maybe we're in an uptrending market and I don't want to sell, then I'll wait for price to break resistance and turn resistance into support. So just basically stems off my higher time frames. If I'm looking to sell at that resistance, or basically I first of all create a directional bias of higher time frames. So my directional bias determines which direction I want to go. So once I have a directional bias, then only am I looking at support and resistance. If I want to sell, then does support matter to me? No, because buying happens at support. I'm only looking at resistance areas. If I want to buy based off my higher time frame bias, then I'm only looking at support structures. Assuming that assuming that price has already had multiple rejections, that just stems off, like I said, off my directional bias. If I have a structure, multiple touches, resistance, then because of the structure, maybe if it's an ascending structure, my bias is probably going to be sell biased. And because it's sell biased, I'm looking for trades at resistance. CT.main. Yeah, guys, I guess if there aren't any further questions, we will be rounding up the session. Hopefully I answered your guys' questions. Hopefully we spoke about, okay, cool. I do see that. Okay, cool. Hopefully we spoke about understanding our currency pairs. We really understand what they are. When we're buying and selling, what are we doing? For example, when we sell USD JPY, do we really know that we are actually buying JPY when we sell USD JPY? Do we know that we are buying into yen strength? Do we know that? That's what today's session was about. And someone's asking, am I ready for NFP? I am not a fundamental trader, guys. I trade 100% technical. So what news is for me, news helps me know when to stay out of the market. So I do have a position open on CHF JPY. I've got a nice sell running there, so I hope that's okay. So all I'm going to be doing is waiting to see if NFP puts my position into profit or puts me into a negative. That's all I can do. Otherwise, I'm not going to be looking to enter any positions around NFP time. So as an intraday trader, is the daily necessary? The daily is necessary to anyone, whether you're scalping, whether you're intraday, whether you're swinging, whether you're whatevering. Yes, I do mentor within the Forex Chasers. Yeah, as you guys can see, I am on the Forex Chasers channel, YouTube channel. So yes, I am a mentor at Forex Chasers. The daily time frame is, tell Mamba we didn't forget about the prank. I take advantage of the NFP. Yeah, that's 100%, man. That NFP provides opportunities to a lot of people. Please, do you have access to Ref Wayne? Not personally. I mean, he's not a personal friend of mine. He's just someone that I know by association. So yeah. There was a question, intraday daily. That's the question that I wanted to answer before we called it a session. So with regards to the daily time frame, guys, whether you're a day trader or each and every one of trading, you need to have two types of analysis. You need to have a long-term analysis where you only look at and where you only focus on higher time frame structure, where you get a directional bias and important key areas of higher time frame structure. And obviously that would involve the daily at least once a week. That's what I do. I look at the daily at least once a week. During the week, I'm only looking at the 4 hour, the 1 hour, 15 minute, 5 minute, 1 minute. I don't look at the daily because I looked at that during the week. So I do feel like it is important for you guys to still be getting the reference of the daily chart. If you're at daily resistance and maybe 15 minutes is telling you to buy, maybe you can put brakes on a little bit because you know that there's we get. So obviously, if we're at daily resistance, guys, do you want to be, guys, remember, we're on the daily chart. So it takes a lot of money to form a daily bearish engulfing or something like that. So do you want to be in where people with a lot of money are going to be going in the opposite direction of you? You on the 15 minute, you want to buy, but there's people on the daily that want to sell. check the probabilities out, dudes. Check the probabilities out. But yeah, point is make decisions based off higher time frame structure, guys. I think I enjoyed the session. Thanks so much for you guys' input. I really wanted this to be very interactive, asking questions, answering questions, and thank you guys for giving me 110% on asking questions, because remember, point is, because this is not a YouTube video,